Good morning, everybody, and welcome to Carborundum Universal's earnings call. To discuss the results, we have the senior management team of the company led by the Managing Director, Mr. K. Srinivasan. May I request Mr. Srinivasan to take us through the financial highlights, subsequent to which we can open the floor for a Q&A session. Over to you, sir.
Yeah. Good morning to all of you. Since this is the first call of the year, let me start by wishing you all a very happy new year. May this be a year of growth, success, and less of excitement as we have yesterday. I also take this opportunity to congratulate on all your behalf our CFO, Mr. Sridhar Rangarajan, who would move over to a group leadership role as a group CFO. But since he was the CFO of Carborundum for the last quarter, I have invited him to be a part of this call, and he would take all the financial questions. As far as the performance is concerned, we had a good quarter. Q3 was good, both in terms of volumes as well as in terms of operating leverage. The continuing impact of high inflationary pressure, both on input material as well as on energy, continues, and this ongoing battle of trying to pass on this high inflationary price cost into prices is on, and you will see that getting better as we go forward. On a consolidated basis, Q3 was over 600 crores, which is about 9.3% higher than the last year. Obviously, this is without the excise duty. On a like-to-like comparison, sales grew by 15.4% compared to the last year. Sequentially, we grew by about 4%, which is very good considering the fact that Q3 always for us is a smaller quarter compared to Q2 because it's almost like a 2.5-month quarter. We delivered 54 crore PAT in the current quarter against 44 crore last year and 55 crore in the second quarter last year. So it's almost flattish in terms of PAT. But on a quarter-on-quarter, it grew by 24%. For a 9-month period, sales at 1,692 crore was 10.4% higher than last year. We expect this to get better, and hopefully the year would be on a 10+% growth for the full year. If we go segment-wise, abrasives at a consolidated level on a comparative basis, sales for Q3 was 270 crore, 15% higher than the corresponding period last year. Sequential basis too, it grew by 4%. Like I said, it's a strong growth considering the shorter quarter numbers, quarter period. Year-to-year basis, it's grown by about 7.5%. The strong growth is actually led by Carborundum abrasive standalone performance being very strong, with 17% growth on a year-to-year basis and 4% sequentially. For a 9-month period, sales at 616 crore was about 7% higher than the last year. Business has really picked up. The GST is behind, and hopefully we should see Q4 being even better. Growth in abrasives and Volsky is also stabilizing and getting better. On the electro-minerals, we saw the highest volume growth. Consolidated level, net sales grew to 228 crores against 195 crore. And compared to Q2, it grew by 5%. On a YTD basis, the growth has been 16%. The strongest growth in volume actually came from the standalone. QME standalone, the quarter was 108 crore, which was 45% higher than the corresponding quarter last year and 11% higher even sequentially. The growth has been a bit of a struggle in terms of contribution, but you will see that improving as we go by and get our prices corrected in the market. Volsky grew by 6% in the quarter compared to the last year. A strengthening ruble is today 58 ruble to a dollar, meant that the price that we make in ruble terms for export was lower. But overall, the growth was 16% on ruble terms. On INR terms, for the quarter and for 9 months, the growth was 12% and 24% respectively. Again, strong growth by Volsky, largely by higher volume in silicon carbide. Ceramics, at a consolidated level, net sales Q3 was 124 crore compared to 103 crore for the corresponding quarter last year, 18% growth. Sequential was near flattish, about a 1% growth. YTD basis, consolidated grew by 9% in ceramic. Again, strong growth coming in from all segments. First, 9 months CapEx, we have spent about 50 crores on a standalone and about 76 crores on consolidated. We expect to complete all the CapEx as planned. We'll do about 100 crore for the year. Overall, very strong performance in Q3, but we expect it to be even better on Q4. The key thing that we've been taken as initiative in the last 9 months in terms of driving R&D effort across the company is getting stronger. We have now all the 6 DSIR labs working well, filed over 26 IPs. Some of them are international patents, and we expect all this to come into play as we go forward in the next 2 to 3 quarters. I will now ask Sridhar to take them forward with the numbers.
Thank you, sir. So, morning to all of you. We'll broadly cover the numbers by quarter and by segment. So first we'll take about quarter over quarter. At a consolidated level, we registered a net sales growth after eliminating excise, 80 crores, with operating PBT growing about 20 crores. PBT growth came largely on the back of higher volumes and lower interest costs and other operating income. Let us understand the results by entity. Standalone PBT were up by 12 crores. And this is largely because of the higher sales of 76 crores. Subsidiaries PBT increased by 8 crores, largely contributed from Volsky Abrasive Works. Sequentially, on a sequential basis, at a consolidated level, we registered a sales gain of 21 crores and a profit drop by 3 crores. This is largely coming because of the low power and fuel costs going higher in Volsky Abrasive Works. Entity-wise, the PBT were up by standalone PBT were up by 1 crore. Subsidiaries PBT were lower by 3 crores. Again, largely coming from Volsky Abrasive Works. On an OITD basis, at a consolidated level, we registered a sales gain of 160 crores, which is 10.4% gain, and a PBT gain of 38 crores. The entire gain came from volume and better cost leverages. Entity-wise, CUMI India had a profit pickup of 5 crore on the back of 100 crore sales increase. Subsidiaries gained 33 crores coming from better performance of Sterling, CUMI America, China, and WA. You would remember the last year during the second half, around 5,000 tons of production were lower owing to power supply disruption in Volsky Abrasives. So that is not there, and they could pick up higher volumes. Now let's see by segment. Abrasives, PBIT margin abrasives increased from 12.2% in Q3 last year to 13.5% in the current quarter. The margins have improved on the back of higher sales in standalone business. On a sequential basis, the margin dropped from 14.1% in Q2 to 13.5% in Q3, largely due to the lower profits in Sterling Abrasives. On a YTD basis, profit were higher by about 3 crores. Margin expanded from 12.3% to 12.7%. The entire gain came from CUMI standalone. On EMD, consolidated PBIT margin of EMD went up from 11% in Q3 last year to 14.8% in the current quarter. The increase in PBIT of 12 crores was contributed both by higher volumes in WA and standalone EMD business. Sequentially, consolidated profits were lower mainly due to WA as the power costs went up to 2.56 rubles. YoY basis, consolidated PBIT was higher by about 29 crores. The entire gain came from Volsky Abrasives and the standalone business. Ceramics, PBIT margin of ceramic was at 16.6% compared to 13.9% in Q2 and 15.8% in Q3 last year. Indian industrial ceramic had a good quarter on the back of better volumes in tiles, metallized cylinders, engineered ceramic products. Refractory business sales were also higher due to a comparative higher execution of order. YTD level profits were higher by about 3 crores owing to higher sales in standalone business. As far as CapEx, 76 crores we have done for YTD December. As communicated earlier, we will be in the range of about in and around 100 crores CapEx for the full year. Debt to equity ratio on a standalone basis, debt to equity ratio was at 0.01. as of December against 0.02 as of the September 2017. The total debt was about 9 crores. And on a consolidated basis, the debt-to-equity ratio improved from 0.1 of September to 0.09 December. The total debt at consolidated basis, both long and short put together, is about 125 crores. On a consolidated basis, cash and cash equivalent would be in the range of about close to 145 crores. So which means net of cash and cash equivalent, the debt the cash and cash equivalent is higher than the debt that we carry at this point in time. So with that, I would like to sum up saying that I think broad trajectory that whatever we have been communicating, we are tracking that path. All the capexes are in place. Metallized cylinder lines are also come in place in the last quarter. So in the coming year, we will start seeing the capacity utilization going up, which will result into better results. And the challenges are how to pass on the cost increase, as Mr. Srinivasan was explaining. So the team is working on that. I think with that, broadly the balance sheet is strong. It's more than zero debt at this point in time. And the capacity utilization, as it starts going up, we'll start having better cash, and we'll start looking at opportunities to utilize them well. So with that, we'll open up for your questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Balchandra Shende from Anand Rathi. Please go ahead.
Good morning, sir, and congrats for a good set of results.
Thank you.
And Sridhan, sir, congrats to you also.
Thank you.
And sir, regarding results, power cost has increased both in subsidiaries and standalone levels also. But I guess in subsidiaries it is largely because of the petcoke prices. But why it has increased on our standalone basis also?
See, if you look at just to set the context, power cost as a percentage of consolidated sales, if you see that it is really coming down, though absolute number is going, which is what your observation. If you see that power cost on an OITD basis is about 14.1%, so it is really on a good wicket. But what is happening is there is a 14% volume pickup in the domestic the volumes that we are generating out of electromineral business. So which means higher power costs, naturally, because the volume is going up. Second reason is that we also have the fuel cost, almost about close to 10% has gone up. The rate of fuel has gone up. And the third reason is the WAS power cost has gone up, largely because of the seasonally it always goes up. Almost we have reached 2.46 at this point, 2.56 rubles at this point in time. So these are the broad reason why our power costs in absolute term is going up.
And sir, in the electrominerals, what I've heard is like silicon carbide prices are shooting up. So are we seeing any, in our recent growth in this quarter, have we seen any price increases, and how much percentage it was due to the price increase?
See, we have putting up prices of all products, not only silicon carbide. Actually, in silicon carbide domestic, we are hardly getting on an average about 3 to 5% price increase. But all prices are being put up. Brown fused, white fused, zirconia, everything is going up. Simply on the back of all the input material. You mentioned petcoke. Petcoke has gone up, but even larger increases happened in the graphite electrodes, 7 times. zircon sand, bauxite, everything has gone up. So we are correcting prices. In this quarter, the net impact of price alone would have been probably around 5% for the electromineral. But we need to continuously get the impact because like we have contracts ahead for quarters, so we have to continue to deliver at agreed prices. Similarly, we also have contracts for the raw material that we buy, right, from alumina and others. But the spot prices are all going up much more rapidly. The next 3 to 4 quarters would be both input costs going up and prices going up.
Okay, so how much is the tenure of our contracts? Means like
depends on businesses and customers. The longest we ever agree is for 6 months on price. Volumes could be for up to a year. The same both ways, both for inward and outward. We take, let's say, alumina contracts with major suppliers in India as a 1-year price and quantity fixed, which is what we buy, which is nice. But our contracts with customers generally tend to be for 6 months. Exceptional for some special customers like DPF, we have to agree on a 2-year contract with agreements of review of prices after every 1 year.
And so my last question on the synthetic graphite, which we said here last quarter, means are we have advanced on the planning stage, or we are still?
We will come back with some announcements hopefully during the next 3 to 4 months. We have done quite a bit of work. It's crossed alpha. We will do something and we'll get back to you.
Okay. Thank you, sir. Thank you very much.
Thank you. We'll take the next question from the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Good morning, sir. Congrats on a good set of numbers.
Good morning.
Sir, just wanted to know what would have been the volume and value growth in abrasives? What would have been the industry growth? Would we have one market share during this quarter, or at least over the past couple of quarters?
Abrasive sales growth has been 7%. I would believe about half and half would be the volume and price growth. That is, I'm talking of a YTD kind of a growth in abrasives. Most of the growth would have happened in India. So that's to give you an idea of the sales growth. Would we have one market share? I believe we would both be around the same in terms of market share, though our margins have probably improved a little better than the others on 2 grounds. One is we probably are far more efficient. 2, we are also being more aggressive on pushing up prices. So that is broadly what it is. Generally, what is also happening in the market is this expectation of a big boom after GST is really not happened as yet. We hope to see it happening. The demand is still largely muted, and we have to see how it pans out in the next 2 to 3 quarters.
Okay, and the growth which we are currently seeing, which was absent last year, that is because of which sectors?
Across the board. If you're looking at abrasives, it is largely on the what we call as the customer accounts, which is really the auto component. They seem to be doing significantly better than the previous year. The actual retail counter sale, which is really the hardware, paint counters, home improvement, very muted, practically at the last year's level. No big traction there, which is what is really expected after GST. That is really still to happen. On the electromineral side, I think it's a global demand coming up largely with declining output coming out of China. Practically a shortage situation in most of the minerals and the inputs that go into the mineral. Ceramic side, most of the growth that we are seeing are on the engineered special ceramics, which go towards high-value products and customers. So overall, global growth of almost everything that we are doing is very robust, and our expectation in the next 2-3 quarters is also very robust. We expect very strong demand for all that we make across the globe.
Got it, sir. Got it. And ceramics, what would have been the growth in met cylinders? I mean, met cylinders we supply internationally, I believe. And you told that the demand is picking up, but what would have been the growth in mets and...
Sorry to interrupt, Mr. Swaminathan. So we are not able to hear you. Can you speak
Hello?
louder?
Yeah. Am I audible now?
Yes, thank you.
Yeah. What would have been the growth in met cylinders, and what would be the quantum out of the overall segment in that?
See, the met cylinder, it's very difficult to see what is the international growth in this, because this is largely related to transmission lines, etc. all that we know is the NGK plant has been transferred, commissioned. We will hit full capacity in the next 2 quarters, by which we should come to about a 1.5 to 1.8 million cylinders. At that time, we expect that we would represent a significant part of the global production.
Got it, sir. And when this grows, I believe this carries better margins than the other sub-segments in the ceramics one. Can we see further improvement in the ceramics and refractories margins, substantial improvement?
I think broadly what we communicated earlier, we will continue to be tracking that. So one is that there's a growth that will happen in the cylinder sales, and because of that margin will go up. We also expect cost push and the price pressure on the tiles business. So on a combination of all these factors, we will definitely have an improvement in the PBIT margin.
Got it, sir. Got it. Yeah, thanks a lot, sir. I'll come back in the queue.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, please limit your questions to 2 per participant only. The next question is on the line of Kashyap Pujara from Axis Capital. Please go ahead.
Hi, sir, and congratulations for a decent set of numbers.
Thank you.
Thanks, Kashyap.
Yeah, just a couple of questions. Firstly, on the price increases front, in abrasives, what is the kind of price increases that we have taken in the last 3 months? And is it fair to assume that the full impact of the price increase is not reflected in this quarter, and it would be more starkly visible in the quarter ahead?
I think that's a fair estimate. We have asked for a price increase anywhere above 6%, but what we probably would have realized in the last quarter would be significantly lower than that. We should see price increase playing out in the next 2-3 quarters, but I was also warned that there is also a parallel cost price that is also hitting us. So this is a moving target. As we are putting up prices and we are winning in the counters, we are also seeing that the input costs are also going up. So like I keep saying, we're going to play out a role in the next 3-4 quarters of a very inflationary market where all input costs are going up, and a battle to get the corresponding price corrections in the market. So this is how it's going to be for the next 3 to 4 quarters.
Sure. And my next question pertains to growth. Is growth, getting broad-based now? I mean, given that the economy is seemingly on an uptick, at least the companies have started reporting decent numbers. So per se, are we seeing a benefit of, growth getting more broad-based? That is one. And the second question pertains to SIC. We have seen a very strong performance there. But I just wanted to understand what is the kind of impact because of SIC pricing, driving profits versus volumes driving profit, given that, with commodity prices on an uptick, are we seeing SIC moving up and that is driving the profits there?
On the electro-mineral, I'll answer your last question first. On the electro-mineral side, again, the input cost increase has been horrendous. Everything has gone up. Petcoke has gone up. The single largest producer of SIC we have in Volsky, where from 2.15 ruble to 2.56 ruble, 20% increase in energy price in 1 year. So the input cost is probably growing faster than the price correction that we are getting. But we seem to have done better primarily because we have picked up another 3,500 tons of SIC volume. In South Africa, the improvement has happened not in spite of all the negative things. We have a 7-time growth in the graphite electrode price. The zircon sand price is up by near 40%. But a technological breakthrough, we have made a new product called the Z450, which is the first of its kind, which allows us to produce a very superior zirconia product with far less impact on price, because we use less graphite and less power. And this product has been launched and it's been very successful so far, but we have to see the volumes picking up. So that's a technological breakthrough surmounting the cost pressure that is coming up. So the electro-mineral vertical as a whole, very strong demand growth, very strong requirement, simply because the Chinese production is going down, the economy globally is picking up. So demand is strong, requirement is strong, huge pressure on prices simply because the input cost is also going up. So it's going to be a battle for the next 4 quarters. And you asked a question, sorry, on terms of overall robust demand. Absolutely right. All segments, all sectors have shown strong pickup in demand. We didn't see the big boom in the abrasives distribution that we expected after GST, but other than that, every other segment is showing robust growth.
Thank you. We'll take the next question from the line of Bharat from Quest Investments. Please go ahead.
Congratulations, sir, and good set of number, and congratulations, sir.
Thank you, Bharat.
Sir, as you said, except, abrasive side, distribution side, we are not seeing where the profitability is little higher than the other side. Is that my understanding? And once that pick up, then also profitability overall of the abrasive can improve?
Absolutely right, Bharat.
So how still we are not seeing, so when do you expect, on broader sense, overall if demand is improving, so when distribution is likely to expect that?
Very difficult to answer this. Like I said, the distribution-based abrasive production is roughly about 60 to 70%. Retail counter sales, we are yet to see the positive impact that we anticipated after GST coming up. The regular sale continues, but we are not seeing the huge traction that we expected that once GST is rolled out, everything would get more organized and we'll see a big boom. This actually hasn't happened. So it's anybody's guess whether it's going to happen at all. If it doesn't happen, it means that people have found a way to work around all the positives that we thought of.
One more thing, that you said that our demand is also improving, we are able to pass on the price, simultaneously raw material prices are also going on. So how, in what time frame really we can catch up with the increase in raw material and passing on? And second thing, you said some of our IP product that will start kicking in next 3-4 quarters. So what kind of that opportunity can you elaborate a little more?
I answer your last question first. I openly said about the Z450. This is clearly a technological winner. Uses far less power, far less graphite electrodes, and this could be an absolute revolution. First trial production is over. We have put it in the market. We have launched it. Once it gets traction, you will see a complete different set of numbers coming out of South Africa. So that's the first of the IP kicking in as results in the market. You will see how it picks up. Many of them are happening, and we will announce it as and when they really become a commercial story. As far as the inflationary environment, I said it in the beginning, I would say it again. We are now running a battle for the next at least 3 to 4 quarters of a continuously increasing input costs, driven by a continuously increasing pricing demand that we are putting up, and there is always going to be a catch-up in this too. But I think this will continue at least for 3 to 4 quarters. We don't see a respite in this unless we see some dramatic change in the way China is going to organize itself. We don't see this happening at least for the next 3 to 4 quarters. It's going to be an ongoing battle.
Okay, thank you. That's all from me. I wish you all the best, sir.
Thank you.
Thank you. The next question is from the line of Vineet Malu from Birla Sun Life Mutual Fund. Please go ahead.
Hi, good morning, sir. So just want to understand within ceramics division, if you could just highlight what are the sources of growth that you're seeing. I know there are various sub-segments into it, so if you could just elaborate a little bit on that.
Ceramic, I think we will talk of 2 parts. The industrial ceramic, the biggest growth, like we said, is going to be to get the capacity utilization up of the metallized cylinder plant, and that's going to be the big driver. The rest of them are also seeing growth, but the single biggest driver is going to be the higher capacity or utilization of the met cylinder business. On the refractory piece of the ceramic, overall improvement in demand situation, and you will see volumes picking up.
So refractory would be related to which segments?
The refractory that we primarily target and see volume pickup largely is going to be around glass, carbon black industry, and other non-ferrous. We are excluding steel because we are not a big player in the steel refractories.
Okay. And another question was about, again, this about raw material prices. So I don't know, it's not it seems that you're hinting at there will be margin compression going ahead. So could you confirm that, or are you ahead in terms of price increases?
Yeah, so let me once again reiterate, we don't expect margin compression. We expect margin to hold or improve, but I don't want to put out a number that we'll have so much of pricing power that we'll have an improving margin aggressively, because it's a demand that's going out on customers for a price increase on a regular basis. The input costs are going up. We will continue to correct prices, and we hope to at least hold or improve margins as we go forward.
Sir, I'm sorry, just to clarify a little bit more on that. So when you say margins will at least hold, you mean gross margin, right? It is not that we might lose on gross margin and which would be compensated by operating leverage.
I think it's a combination of both. I would have to be careful on what I talk to you, because we also have to work with customers to get prices.
See, it's largely what we are talking is a PBIT margin, which is after both the effects of volume and cost versus price, this one. So it is a continuous moving target, because there's no one giving a supplier giving a large period contract. It's a short period contract. So obviously you have to expect what kind of cost push is likely to come, and then you have to also work with the customers. So it is always a catch-up game. So you will find this challenge continuing, and we are expecting this challenge to continue at least for the next 3 quarters.
And are you seeing a lot of competition?
Sorry to interrupt, Mr. Malo. May we request that you return to the question queue?
So it's just related to my earlier question, and I'll be done with this.
All right, sir. Please go ahead.
So the last one is, are you seeing a lot of competition in terms of, when you want to take pricing action in the market? What I'm trying to understand is on trade side, is it much easier to pass on pricing, or industrial side? How does it work for you?
We are driving prices. The competition is not driving prices. We are driving prices, and we have to do it across all our geographies. And the challenge is not getting the price increase. The challenge is continuously getting price increase on an ongoing basis. Neither is the customer used to, nor is our sales force used to getting prices every 6 months or every 3 months. And this is a battle that's going on. As a leader in most businesses, it's our responsibility to drive prices, and we're doing it.
All right. Thank you very much.
Thank you.
Thank you. We take the next question from the line of Neera Vasa from B&K Securities. Please go ahead.
Hello, sir, and thank you very much for the opportunity. So, sir, based on this, exciting scenario, would it be possible for you to share some kind of guidelines in terms of growth, which is possible for FY19? And now that demand is also very strong, and we have capacities also in place, and everything as of now seems to be on positive side. Earlier, we had stated that the maximum earning potential on the existing asset base is of around 3,200 crore rupees. Do you think that number can be revised upwards?
Yeah. So just to reiterate, I want to make a statement here that we make certain statements which reflect our future outlook, or which could be construed as a forward-looking statement. These statements are based on management's current expectation and are associated with uncertainties and risks more fully detailed in our annual report, which may cause the actual results to differ. Hence, these statements must be reviewed in conjunction with the risk that the company faces. So this is just a cautionary statement that we would like to state. So by and large, as we earlier communicated, we are treading to the trajectory that we earlier communicated. 3,300 crores is doable in 2 years' time. This is what we have been communicating. Now, is it going to be higher than that because of, I think, the price increase that we are, putting up, etc., is your question. I think it is too early to, judge this call, because the next 3 quarters is very critical for us to tread, because once the Chinese industries come after their New Year season, what they are going to do, behave, how is cost going to be there, all that needs to be really looked at that. But by and large, we feel that, the trajectory that we communicated is possible to do that.
And sir, guidance for FY19, something that, any numbers that you would like to place?
We will get into the planning mode. We are just working on it. So as and when we complete that process, we will probably get back to you. But as I said, right now this year we are looking at about 2,300 to 350 crores by and large top line in that range. So, and then from there we can go up by about 1,000 crores. So in 2 years' time. So that's a broad indication we can look at it at this point.
Thank you very much, sir. My queries have been answered.
Thank you.
Thank you. The next question is on the line of Rajesh Kotari from Alpha Accurate Advisors. Please go ahead.
Congratulations, sir, for a good set of numbers.
Thank you.
The first question is, do you have a kind of a raw material price index, business-wise, particularly in ceramics as well as electrominerals? And if yes, can you tell us what is the actual cost increase, what you are facing on weighted average basis? That's question number one. Question number two is, what is your current capacity utilization? And by next year, how much do you see the ramp up in capacity utilization? And question number three is, you just mentioned something on guidance for FY18 and then you said 1,000 crore additional. If you can a little bit clarify on it, I missed that sentence.
Yeah, okay. The last one first is that I said by and large we can get 1,000 crores of sales increase in the next 2 years. That's what I mentioned. And
you mean to say that by FY20 you can add 1,000 crores revenue?
Yes.
Compared to what we are going to see in FY18, am I right?
That's correct. That's correct.
And FY18 you are saying by and large you are on track of whatever we are doing on run rate basis.
Yes, it's correct.
Okay, fine.
And then your question is on the capacity utilization. So since we have very varied product range, I'll give a broad indication. As far as industrial ceramics, on the metallized part we will be operating above 85%, and on the tiles we will be operating about 70+%. Refractories overall about 70% we will be operating. Abrasives on the coated side we will operate above 85+%, and bonded we would be operating about 70+%. Electromineral, most of the product we will operate above 85+%. Newer capacities we would operate less than 20%, as we just commission and start working on it. On the first question on the cost versus, it's too difficult to work and come up with a number, but as we said, our price increases are all towards addressing the cost push, and that is the whole objective that we are working. Wherever we are not able to absorb this by virtue of our productivity and other benefits that we would like to get, we are in the process of passing it on to the customer. So that's the whole objective with which we are working on it.
So on your capacity utilization,
Sorry to interrupt, Mr. Kotari.
no, this is just a same, based on
Request that you return to the question queue. There are participants waiting for their turn.
Sure, thank you.
Thank you. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Hi, sir, and congratulations for a very good set of results. So the focus from my side is going to be more on margins. Now, I understand that today the environment is inflationary and good demand is helping us right through price increases. I just want to get a sense based on your past experience that, let's say, in times of this turning around and environment becoming deflationary, is it fair to assume that you would be able to hold on to prices, or would the decline in prices also be very sharp?
So far, our experience has always been that in our business, the deflationary cycles are, let's say, smaller than the inflationary cycle. So you tend to give away some part of the margins when everything goes down, but that's less than what you took it up. So the general trend seems to be upward, and that is also true with the cost situation, because the operating costs also start climbing up as you start working upward, and that's the way it has always been. So let's say you take a price correction of 5 to 8%, eventually if there is a deflationary cycle, you may probably end up giving away about 2%.
Got it, sir. So the second question which I had was that the capex run rate that you're talking about right now, which is 100 crores and thereabout on an annual basis, once you would be reaching the 3,200, 3,300 crore mark, what kind of numbers would you then be thinking through in terms of capex over the next 2-3 years?
See, our capex are never anything very large. It always tends to be around 100 crore in a year. And I think we would stay around that because our business is not so much on a big one-time capex. It's an ongoing incremental improvement of plants, specific projects, etc. So we are not looking at any dramatic capex part. There could be an M&A opportunity or something that it may evolve. But in the next 2 to 3 years, our annual capexes are all going to be around the range of 100 to 120 crores, not more than that.
So I was just trying to get a sense of beyond the time that you hit your peak capacity.
We will continue to look at it. We are, like Sridhar mentioned, we are on a business plan cycle, just going ahead, planning for the next steps beyond 3,000. I think there are quite a few exciting new things that's happening around the IPs that we are creating. I mentioned one because that's out in the public, and we expect to have more happening, and we will come up with better numbers as we go forward.
Sure, so those were my questions. Thanks a lot. Thank you.
Thank you.
Thank you. The next question is from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi, sir. You alluded to a new technological breakthrough in electromineral side. So would you elaborate more about the demand potential end use of that particular product?
Yeah. The zirconia product that we make in Foskor as well as the bubble that we make in Cochin from the electromineral division largely are what is called as monoclinic zirconia, used in many applications right from refractories, converted into alumina zirconia for abrasives, used as fine ceramic for various applications like pouring cups, etc., for pigments, for nuclear rods, whole lot of things. That's a basic raw material used by many industry. In many new requirements, they would like to have the radiation content on it, what we call as a U plus TH. We would like it to be below 350. And there are special applications for that. The way that we now make it as a new product, Z450, guarantees that the U plus TH will be below the 450 mark. We will be at most times below 350. That's why the name Z450. But also more importantly, in today's context of a high cost of graphite electrodes and high cost of power, the way that we make it allows us to use less of graphite, less of power. So not only in this process we get a superior product, but it is also a very competitive product. And this is a breakthrough, and around this is what we are trying to build a new range of products and business. I think that is the largest technical explanation I have put out in public so far.
What is the demand potential? If you can put it in any numbers, opportunity size.
The zirconia, monoclinic zirconia's demand is in excess of 25 to 30,000 tons, special zirconia. So let's see how much we can take out of that.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Jasdeep Walia from Infina Finance. Please go ahead.
Good morning, sir. Thanks for taking my question.
Good morning.
Sir, your volume growth in electromineral business has been pretty good. So I would imply that the capacity utilization levels are running pretty high in that business. So what are your thoughts on capex going forward in that business? And what would be the nature of that capex? Would it be brownfield, greenfield, or would it be value-added products or basic raw materials?
Yeah, just it's like this. The capacity utilization of SIC in Russia is near flat. We are trying to get an incremental capacity. We said we are about 80. We'll move towards 90. It will happen over 2 years. On the Foskor zirconia business, we have the new range that has come in, Z450. Our capacity there can be at least about 8,000 tons a year in both the products together now because we have a new process. So, there's not going to be too much of a capex around it. We will do some incremental things there, but we're going to scale up there. As far as Cochin is concerned, I will give you an overall number. We're roughly doing about 2,700 tons to 2,900 tons a month today. But if you run all our investments flat out, we can go to about 3,500 to 3,800 tons, even what we have put on the ground. There would be incremental improvements and changes required, power supplies, blah, blah, processing, etc. So, but these are all much smaller. So, when we talked of this 3,200 to 3,400 crore, most of what is required for it as the major capex is already there. Now, what more we're going to do, there are a lot of IP-related activities going on. I could put out in public the Z450 story. Similar things we are working on would have to come up to drive new capex. We have to look at the new capex to be technically different, to consume lower power, lower of the critical material like graphite, and to address newer markets. So we will have to talk about it as we go forward.
And so what are your thoughts on increasing capacity in Russia?
Like I said, we are working on moving 80 to 90 work is in progress. We will take it up in 2 years. Beyond 90, we have not thought through. We are not talking of a greenfield or a big project, and I explained it much earlier as well. Russia is still with sanctions from all major countries. We have to look for a major, another, let's say, 50,000 or 100,000 ton is a big call, and that we are not going to take it now.
You're not looking at any other geography for this silicon carbide project apart from Russia?
There are some few looks, but that's all WIP. We'll have to wait till it is announced.
Okay, got it, sir. And so, how are things moving forward in China?
Mr. Walia, may we request that you return to the question queue?
This is my last question.
There are participants waiting for their turn.
Okay.
Thank you.
Thank you.
The next question is from the line of Bhumika Nair from IDFC Securities. Please go ahead.
Yeah, good morning, sir, and congratulations for a great set of numbers, and also to Mr. Sridhar. Sir, two questions. I think most of them have been answered, but two questions from my side. One is, given the pickup in EMD that we've seen, how is the new capacity scaling up? And question number two is, with the improvement in demand that we are seeing, how is the microgrid facility scaling up? The shift towards the diesel particulate filters, etc., that we were looking at.
Yeah, to answer the last question first. After a long time, we have a 9-month contract for the DPF, so we're going to see some good volumes coming up from the microgrid plant. The microgrid plant is actually now, in the last couple of months, running well. We will see volumes coming up. I would like to be quiet about the margins, let it evolve, because there are practically only few customers in this business. Coming to your first question, Sridhar mentioned it, our capacity utilization of the bubble plant is still only about 20% or lower. We can do much more there on the semi-friable and the others. So one of the two together plants is running flat out, the other one is still less than 25%. So there is still significant capacities available.
Okay. And on the microgrid, what would be our special, or within the EMD segment, let me put it that way, within the EMD segment, what would be our specialized revenues now contributing to?
The specialized is not just microgrid. We have alumina zirconia, we have bubble zirconia, we have azures, we have semi-friable. I think we have still capacities. This is a battle for input price and selling price. So I would leave the margins out, but this business is yet to pick up fully.
Okay, great, sir. I'll come back in the queue. Thank you so much.
Thank
and
you.
all the best.
The next question is from the line of Preeti Jain from Sundaram Mutual Fund. Please go ahead.
So what would be the volume growth in abrasives for the current quarter?
See, by and large, I think earlier Mr. Srinivasan was explaining is that we are about, on a full year basis, about 6.4% growth. It's predominantly it is a volume and mix growth. That is what we are looking at this point in time.
So how we see as volume growth over next, say, 6 to 9 months, how we are seeing volume growth, sir? Say post GST, any curve in imports have been happening? Are we seeing at the in the say wholesale channel any curve in imports have been happening? Any inventory destocking has been happening, sir?
See, I mentioned we all expected a significant traction in the counter sales post GST. this is still WIP, or to put it very bluntly, we have not seen it actually. So it is still business as usual. We have to wait and watch how it pans out in the next couple of quarters. If it still doesn't happen, it means people have found their own workarounds to handle it. So this big boom that we all expected after GST is implemented is still WIP.
The e-way bill, can it be a game changer, sir?
We really don't know. See, after the GST thing,
that is first come.
Yeah, none of us can guess anything because all our motherhoods don't seem to work because finally on the ground, eventually people are far cleverer than anybody else. We don't know how they find a workaround, but let's put it like this. It's still work in progress. We don't know how it's panning out.
Okay, sir. Thanks, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Ujjwal Shah from Quest Investments. Please go ahead.
Yeah, thank you for the opportunity, sir. So just wanted your outlook on the...
Sorry to interrupt, Mr. Shah. Can you speak a bit louder? We're not able to hear you.
Sure. Is this fine? Yeah. Sir, can you throw some light on the performance of our Australian subsidiary, Chinese subsidiary, and how are we going about our US appraisal business?
The Australian business has had an unusually muted Q3, but if you look at it on a full year basis, they've done very well. They'll continue to do well. They have good project orders, particularly power stations in Southeast Asia. They even are doing a power project along with a large Japanese consortium in Morocco. So good movement from being just coal processing plant driven to working more on supplying to the power stations, etc. So Australia doing well, outlook is strong, no issue. China, the new model is working. We are now changed to almost about 85% of all that we sell there is now into China and not out of China, which is a big change. Marginal business at the moment because it's not a huge business at the moment. We will see how the whole model works and then we will look at how to scale it up and how to support it going forward. As for the US business, again, we do two parts. One is what QMI USA does and the second is what we sell from here directly to major customers. Overall, sale of carborundum products into the US would be anywhere between $15 to $20 million. It's a big size. But the US operation per se handles only about $7-8 million of that. Marginal business, still not, it's less than break even. We lose a little money there. This is again work in progress. How we want to restructure it, how we want to change it to address the US market is something that we will play it out in the next couple of quarters.
Okay, sir. And sir, on the second question, sir, other expenses were unusually high during this quarter.
Sir, we are not able to hear you.
Other expenses were unusually high this quarter. Was it due to some exchange?
This is where the
GST other expenses, what I suggest is please take a look at it as a percentage of sale. It would drop. In fact, what we are looking at is going down. Last year, same period, we were at 24.9%. Right now, we are at about 22.9%. So it's a reflection of volume, etc. I don't think anything abnormal is there.
Okay, sir, fine. Thank you. Thank you for the answer.
Thank you.
Thank you. We'll take the next question from the line of Kashyap Pujara from Axis Capital. Please go ahead.
Thank you. All my questions have been answered. Wish you all the best.
Thank you. Thanks, Kashyap.
The next question is from the line of Balchandra Shinde from Anand Rathi. Please go ahead.
Sir, regarding Z450, would like to ask, last time when we introduced bubble zirconia, we faced problem to scale up the volumes there in Fosco zirconia and were not able to actually create that opportunity as a profitable proposition. So how confident we are on this Z450, because again there will be a technological barrier, I think. Then won't it be possible to introduce that product actually in India and then start the operations?
The Z450 is a quasi-fusion process, as I explained. The bubble zirconia as a product and as a technology was a huge success. That's the reason we brought it and recommissioned it in India. The challenge we had was the operating skill of operating a fairly complex plant in South Africa. Now we are operating in India. We have now new challenges. The graphite electrodes have gone through the roof, and sand availability is a challenge. So we're struggling with that plant, like we said, in India as well, with only 20% utilization. The market demand is good, but we'll have to get prices for that. Now, for the Z450 story, everything is in place in South Africa. The raw material, the way we process it, the way we do a quasi-fusion and treatment. Since we are able to do it efficiently there, and it's a existing used plant, we're able to run it well. There's no technical challenge that the people are not able to handle. Here the challenge is going to be quick scale up and winning customers in the world. We'll have to give it 3 quarters to see how soon and how fast we can do it. Once we hit a peak, we may decide to do some part of it also in India, but that is a call that we will take after 3 to 4 quarters.
But as per your analysis, by usage of Z450, as you said, how much graphite electrode your usage will get reduced?
It can come down to a third of what we use on the regular fusion.
Okay.
1/3. That's a big change.
Okay, from means like 1.7 kg per ton, it will come down to around 0.6 kg per ton.
I don't want to get into the numbers, but I think it will come down to 1/3.
Okay, 1/3. Thank you. Thank you very much, sir.
Thank you.
Thank you. We'll take the next question from the line of Aditya Monga from Kotak Securities. Please go ahead.
So thanks for the opportunity again. I recall Mr. Sridhar talking about the 6.4% volume growth number, which I couldn't understand. It would be great if you could give the volume growth numbers for the third quarter across segments so that we can decipher.
What I said is abrasives YTD basis 6.4% growth.
Can you also give the numbers for the other 2 segments in a similar manner?
I will give you sales growth for YTD. EMD 24%. Most of it you can take it as volume growth because there is also a down trading. That's why I said most of it volume growth. Then in terms of ceramic, it's a 7%. So I'm giving you sales growth YTD, all 3 segments standalone, and you can take it by and large. This would represent a volume growth. Why I say this, there is a price correction, but there is also a down trading. So it's a combination which really negates the price correction effect. So there is a volume growth almost to the same level as the sales growth.
Got it. So the second question was more on this metallized cylinder capacity. At full capacity, how much would be the revenues that you would be able to generate? I
would leave the revenue part for the time being. The volume we will hit is about 1.8 million cylinders. I'm being careful here because you also have to understand that, look, if I tell you the numbers and 1.8 people will tell me our average realization of cylinders is so much, then how do I work with my customers?
But the ballpark numbers, I'm just trying to get ballpark numbers over here.
Let's leave it out, please.
Got it, sir. Thank you. Those were my questions.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Adesh Mehta for his closing comments.
Thanks everyone. On behalf of Ambit Capital, I would like to thank Mr. Srinivasan and all the participants for joining us on the call today. Thank you and goodbye.
Thank you.
Thank you.